As we've been discussing, President Biden has placed a ban on imports of Russian oil in another step to cut off Russia's economy from the rest of the world. While many lawmakers in the U.S. and, of course, Ukrainian President Zelensky have been calling for this ban, it is expected to worsen already rising energy costs. According to AAA, the U.S. hit a new record high for gas prices today. The average price per gallon is now more than $4.17 and is expected to continue to rise. For more on this, I want to bring in Ann Berry. She is a financial analyst and the chief investment officer at Wheelhouse Group. And welcome. Thanks for being with us. So gas prices have already reached a record high today. How much worse is this ban going to make it?
It's going to get worse before it gets better, and that's because the record prices we see today is a function of the sanctions that have happened so far against Russia and the actions oil and gas companies have taken so far. Now that President Biden has announced that the U.S. will curtail imports of Russian oil officially as a policy matter, the oil prices are going to continue to go upwards and Americans will continue to feel the price at the pump. So it's going to get a little bit worse for a while.
All right. And the U.K. is also expected to ban Russian oil imports. Oil and gas makes up more than a third of Russia's revenue. What is this going to do to Russia's already crumbling economy?
Well, in terms of the magnitude of the impact on Russia, really, these are important measures being taken by the U.S. and the UK because it shows the level of solidarity that the NATO nations are taking together. But the real impact is yet to come in terms of Europe. Europe is the major market for Russian exports for oil and for gas in particular. So yes, the US will feel some pain here, the UK will feel some pain here. But until Europe steps up and also similarly bans Russian energy imports, Russia's still got a flow of revenue. It's still got income coming from sale of its energy to core EU markets. And that's really the sticking point here.
Yeah, so let's talk about that. Why is the EU not joining in here?
Well, if you look at Germany, for example, something like 40% of Germany's energy needs is met by importing natural gas from Russia. Germany has taken some steps. It switched off a key pipeline, the Nord Stream 2, connecting the east of Germany to Russia. But in terms of outright banning imports of Russian oil and gas, the impact on the EU would be really traumatic by triggering almost a recession-like reaction because they do not have substitutes. Unlike the US, there is not domestic production in Germany, and there aren't many green alternatives there yet. And so Europe is going to be slow to this, but it's got to figure out a plan B and it's got to do it fast, including looking at alternative imports if it wants to take a real stance.
Right, because correct me if I'm wrong, doesn't the US only 10% of its oil comes from Russia, is that right? So that's still a manageable,
that's exactly right.
Manageable number, even though we'll feel the pain for it. But, you know, of course, yesterday was a rough day on Wall Street, and already today is off to a bumpy start. Is there any hope of the stock market adjusting to these sanctions, this new short-term energy reality?
It's going to be a little while yet. It's not just oil and gas that's impacting Wall Street right now. It's also the impact on wheat prices. Russia's a very big producer of wheat. It's the impact of corn. I was meeting yesterday with some traders on Wall Street who've seen volatility, the likes of which they haven't seen in a long time in these commodity sectors. Aluminum and precious metals, another space where we're seeing it. So I know there's a lot of chatter right now about, is this the time to buy the dip? But I think Wall Street's cautious. We don't know how supply chains are going to respond yet. There's a lot of wait and see.
So much that is unknown about this conflict and about the economic realities we'll be facing in the days ahead. Ann Berry, thank you so much for joining us. We appreciate it.